And go. I'm giving myself a time limit so I speak faster this time. IBC and real estate go together like peanut butter and jelly. What in the heck are people talking about? I know I'm seeing people post about it and saying it, and I would guess a lot of you see that sentence or see that quote and say, what the heck are they talking about? What is IBC? I know what real estate is. What does that have to do with eating a peanut butter and jelly sandwich? I have no clue what these guys are talking about. So I'm here to explain. So IBC stands for Infinite Banking Concept. Now, Infinite Banking Concept is a way of thinking that the wealthiest of wealthy individuals in the world have used for years. It is essentially a warehouse of wealth, a place that you can hold your wealth while it's not in motion. And at any moment, you can put it in motion. So think of it like a savings account on steroids, a savings account at the bank that you can pull your money out, you can pull your money in, you can use it as leverage to get a loan, you can do all kinds of things with this money. It has absolutely no risk. It's never going to go down. But if your money's in the bank, it's also probably not going up, or if it's going up, just a little bit up, right? So IBC is when you take a properly structured, specially designed life insurance policy and you have to stack the deck and have somebody who knows what they're doing and creates it properly for you, and you store your cash in there. Now, there's lots of benefits to having this policy, but one of the benefits of having a huge policy that you've built up over the years, or even a smaller policy that you're just getting started, is that you can use it as leverage to get a non-traditional loan with the best terms, better terms than any loan you're ever going to get at a bank at any minute. Because your cash value, your cash that you've built up in this, that is growing constantly, hands off from the IRS generally, if set up properly, hands off from bankruptcies in most states, hands off from lawsuits in most states. It's your money. Nobody can ever touch it. And you build it, you build it, you build it. Okay. Now, when you've built it up, you can go to the insurance company instead of the bank. And see, if you go to the bank and you want to get a loan, you got to fill out a loan application. They're going to run your credit. They want to see your assets. They want to look at everything you've got and say, yeah, Mr. Customer that we love so much, we'll give you a loan, but we're going to give you a 9% interest rate. Interest rates have just gone up, and we want to be fair. You know what? You've been a client for a long time. We'll give you an 8.5% interest rate because your credit's really good. Or you know what, man, your credit's horrible and interest rates are bad, so you get a 10% loan. And by the way, there's an application fee. And then if the loan's for a house, you're going to have to get an appraisal fee. You're going to have an underwriter fee, and then you're going to have a commission paid to somebody. Right? Well, if you have your cash built up in your warehouse of wealth, a properly structured IBC contract between you and a life insurance company, you can call that life insurance company at any time and say, hey, I've got $100,000 built up in my cash value policy. I'd like a $100,000 loan today. And they have to send you, contractually have to send you a $100,000 check at an agreed upon loan rate, no application fee, no running your credit. They don't care what you're using that money for, because your cash value is collateral for that. Now your $100,000 of cash value is still growing, compound interest, growing. But then you've got this loan, and it does have an interest rate on it, but I'll tell you, those interest rates are way lower than any interest rate you're going to get right now. Okay. So now that loan that you've got, you can pay down however you want to pay it down. You can pay down once a year, make a little payment towards it. You can maybe take $500 a month and put towards it, whatever. You're the bank. You've created your own bank. So you make the terms as opposed to your local or big bank that you're used to getting your loans from. So now that you have this policy, and everybody starts somewhere. My first policy was $400 a month. Started it 20 years ago. The thing's got a lot of cash value in it. I have it set up where I'm going to use a real life example in a minute, but it's got a lot of money in it now. And I've taken out more and more policies over the years, and I'm about to use those in a real life example I'm going to give you. So I'm in control of that money. So how does it work with real estate? Well, again, I can use that money for anything. I don't have to use it for real estate, but I'm going to give you a real life example. So We are building a second home next door. It's going to be my office. Oh, my 5 minutes are up. I guess I'm going to have to talk much faster. We're building this home. We're going to close on it in a couple of weeks. It's going to be our guest house, my office, place for us to entertain when we have people that come into town, etc. So that property is considered an investment property if I were to go get a mortgage on it. And I thought about possibly getting a mortgage when I first signed the contract to build this house 9 months ago, when interest rates were 3-4%, even as a second home. But unfortunately, they have gone through the roof. So now what am I going to do? I am going to call up a couple life insurance companies that I have infinite banking concept policies with, that I have a good amount of cash value in. I'm going to call them up and I'm going to say, hey, I'd like you to send me a check. I'd like to take out a loan. And so these insurance companies are going to send me a loan. The house that we're building will probably close right at about $500,000. So they're going to send me a couple checks totaling $500,000. The total interest rate on those loans is going to be around 4.5%. Wow, that's pretty darn low compared to what I would get if I went and got a mortgage. Plus, I don't have to pay any of those fees that I just discussed, and nobody's making a commission when I'm getting that loan from the life insurance company. So now I'm going to take that $500,000 of money and I'm going to pay cash for that house. And now I can choose to do whatever I want to do with that. I could do a amortization schedule and pretend that I've got a 4.5% traditional mortgage and make a monthly payment back on that loan. Or I can just, whenever I get a little extra money, I can pay that back, or I can not make a payment on it for 5 years if I don't want to. Because my 500,000 of cash value in the policies is still growing every single day. It's growing at a very, very good interest rate, tax-free interest rate, compounding on top of itself over and over again. Now, if interest rates go way back down, and I want to refinance it or get a HELOC or cash out refi or a HELOC on that house and pay back that loan to the life insurance company, I can at any time. But the life insurance company has no leverage on me on how I'm going to pay back that loan or when I'm going to pay back that loan, because my cash value is already leveraged for that loan. So another example, in a traditional world that we may be living in with good interest rates, somebody's going out to buy a house, but if they need to put down a 20% down payment, so let's talk about that $500,000 house. They're going to get a traditional loan, but they want to avoid PMI. Ooh, PMI. Don't like that, right? So I need to put down 20% generally. So maybe I just take a $100,000 loan from my life insurance companies, and I still buy the house and I still get a $400,000 loan from a traditional bank or lender. And that's more often what is done using IBC. So what IBC allows you to do is when you see an opportunity, who knows, maybe the real estate market will go down a little bit. Maybe there will be some opportunities. But hey, if the real estate market goes down and there's major opportunities to buy a house that was 500, that is now 400, but interest rates are through the roof, is it really any cheaper buying that house if I'm getting a mortgage? Well, if I use my IBC policy as leverage to get a loan from a life insurance company to hop on that opportunity, I can always go get a traditional mortgage on that house when I want to. But do you see? I'm in control. My money is moving. I am the bank. Sure, I'm still paying interest, but it's a reasonable interest rate. And I have the choice, depending on the contract and who you do your life insurance policy through, which company. I have the choice of doing a fixed loan that will be locked in forever and ever more. So one of the main carriers that we use to set people up with these policies, the interest rate is, for any policies taken out in 2022, I'm suspecting that they'll go up in 2023, but any policies that are started in 2022, the fixed interest rate is locked in for life at 4%. It can never be any more. So if interest rates are 8, 9, 10% as we move forward through this life, you can always get a fixed interest rate loan at 4%. Unbelievable. Now, I also have the choice of doing a variable loan, and that's a whole separate conversation and video on why would I do a fixed loan versus variable loan, direct recognition, non-direct recognition, all these weird things. And that's something else that I would love to share with you down the road. I hope that helps you see why IBC and real estate go together like a good peanut butter and jelly sandwich. It's important to talk to somebody who really knows what they're doing. I can't count how many people we come across that say, oh yeah, I've got one of those infinite banking concept policies, and we review it and we look at it and it simply isn't. It's not set up right. They got hosed by the guy or girl that sold them that policy. We do it right. And I encourage you to reach out to one of our reps at DuVall Financial Group, sit down with them, have a discussion, let them educate you, ask questions, get answers, ask more questions, get answers. Don't jump into doing this. Make sure you are fully educated with one of our reps, you fully understand it, and then start your first policy like I did 20 years ago, $300-$400 a month, whatever makes sense for you, and start building your warehouse of wealth so that you can go out and get some great peanut butter and jelly sandwiches in this real estate and investment world that we live in. And wow, things are changing quickly, but this concept hasn't changed for over 100 years. Hope y'all have a very great rest of your week. Stay blessed.